Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC-TV18. Now, back home on the Lal Street, the market ended higher on Tuesday. In fact, it reversed most of the losses that we saw in Monday's trading session. The Nifty gained nearly around 0.7%. It regained the 11,400 odd mark, while the Sensex hit a double century. That closed higher as well with a gain of around 0.5%. The Nifty Bank as well as the mid-cap index, both of them gained close to around 200 points each, with the mid-cap index closing higher with a gain of more than 1% in trade. However, the big worry is the rupee. That fell to a new all-time low, reaching the 70 mark for the first time ever. This morning, though, Asian markets are indicating a bit of a negative start, and that's precisely what the SGX Nifty as well is telling us. Ekta, run us through all the data points.
Yes, well, like you mentioned, Nigel, on on Monday's trading session or Tuesday's trading session, the Nifty maintained 11,400. This was at a time when the rupee hit 70. So the street was quite sanguine about the fact that that level was going to be breached in terms of the rupee. Eventually, the rupee closed at 69.9 versus 69.93 on a day-on-day basis. But there was a lot of depreciation and a little bit of volatility that took place intraday on the rupee on Tuesday's trading session, because it appreciated all the way to levels of around 69.7, but then fell back to 69.9. In terms of the FIIs, they net sold 379 crores and the DIIs net bought around 391 odd crores. Like you mentioned, it is going to be the currency space, which is basically the emerging market currency space plus macros, which will be the top cues for us to track today. So the Turkish lira has bounced back. It had hit record lows of around 7.24. It pulled back in trade because there was news that Qatar has made around a $15 billion loan pledge to Turkey. So that came in as a positive. The dollar index is still hovering around 13-month highs. There was a little bit of a depreciation which came in, but nothing to really write home about. So that particular fear, the fear of rupee breaching 70 sustainably, even possibly going to 71, is probably what is going to worry the market. Now, it's not only what's happening with the global currencies, but the macros back home, which is probably going to worry the market incrementally as well. That's because the trade deficit data for July has spiked all the way to $18 billion versus $16.6 billion on a month-on-month basis. The street was estimating anywhere between $15 to $16 billion to be maintained. So that becomes a worry for us incrementally. But the positive which is working for us today is that Brent crude has fallen to $70.3 per barrel, which is a 4-month low. This is on account of crude inventory data from the US or the stockpile data. So that would be a positive, but it's now bounced back to around $71 per barrel. So overall, the US ended lower, Asia is mostly lower, and the SGX is indicating that it's going to be a negative start for us. Kotak is obviously also going to be pressured today. This is because the RBI has said that the bank preferential issue, in order to dilute equity, is not going to meet the RBI requirements. So that will be something which the street will work with.
Okay, all right, Ekta. What about a few stocks, though, that we're looking forward to today?
Well, I already mentioned Kotak, so that stock is likely to be under pressure today. But Sun Pharma, Nigel, very positive commentary coming in from the management. The body language was much more positive, in terms of the tone of voice from Dilip Sangvi after many, many quarters. So I expect incremental buying to come in for Sun Pharma. CLSA has hiked the target price to 750 as well. Fortis shareholders have voted for the IHH deal. It was almost a unanimous voting, so that is definitely a positive. But the numbers were very subdued, but I think the street is just going to overlook the numbers this time. Brigade profit 63 crores versus 29 crores year on year. Monnet Ispat losses continue, 390 crores versus 400 crores year on year. Suvain Life, good numbers, profit up 31%. IBREL, profit absolutely flat. Dilip Bilkon in focus, profit at around 255 odd crores. And many other result reactions such as Hathway Cable, MMTC, Patel Engineering, DB Realty, IVRCL, MTNL, all of these stocks will be reacting to numbers. And UCO, because they've entered into an intercredited creditor agreement for stressed assets.
Okay, all right, Ekta. Thanks so much for that. Well, time to slip into a short break. Up next, the rupee tumbles to an all-time low against the dollar. On the other side, we'll get to an analysis of how global cues will impact the rupee. Welcome back. You're watching Power Breakfast on CNBC-TV18. Now, India's trade deficit hit its highest levels that we've seen in 5 years. The trade deficit for July has crossed the $18 billion mark in June. Now, we saw around $16 billion mark getting breached. And this despite a minor decrease in India's import bill, which stood at just under $44 billion. However, the export growth slowed sequentially, and this led to a widening of the trade deficit number. Crude oil imports as well were benign in July, and gold and electronic goods saw a sharp increase in the past 1 month odd. The rupee, remember, fell to an all-time low of around 70 rupees 10 paise on Tuesday. It did not react to July's trade deficit numbers. Also in the past 24 hours, when Indian financial markets were closed, the dollar strengthened, although the lira recovered a lot of its lost ground. How will this impact the rupee in today's trading session? Lata joins us on the phone line with all those details. Hi Lata, good morning.
Good, Nigel. This may look like a difficult morning for the rupee because a lot of water has flowed. As you said, $18 billion is a 6-year high, and this has not been caused by any one-off in the month of July. So it looks like it will recover if you don't do anything about it. If you extrapolate this, the April to July number, multiply it by 3 and look at it for the full year, then you're going to get a trade deficit of 185 billion compared to 150 billion last year. This can mean a current account deficit which could go to about 3%, and that will be seen as very negative. I mean, just to put it in perspective, Turkey is at 5%, and India never breached 2.6 in good years. This 3%, even at a time when crude is not 100. So there is really no excuse to, have a 3% current account deficit. This is how the market will think. Now, why would you have it? There are some people in the market who told me yesterday that maybe Reserve Bank knew the number 24 hours before the rest of us, and that's why they allowed that 1.4% depreciation on Monday and Tuesday. So in any case, the depreciation is coming at a time when we have missed 1 day of trading, and in that 1 day, the dollar index, when we closed, the dollar index on Tuesday was 96.2. Now it is 96.7. It had also gone to 97 almost, 96.98. It has receded this morning, but it is still at 96.7. We have to adjust to that difference. When we went to bed, the yuan was at 6.88. Now it is at 6.91. It had gone to 9.5, but at 9.1, it is still something we have to adjust to. The positive over here is oil is now at 70 and change, which is a very big positive. But the point is this is countered by too many negatives. Also in this 1 day, which we missed, a lot of offshore guys, sold the rupee, and now they will come and buy it up from Indian banks, buy dollars from Indian banks, the foreign banks, and therefore that demand for dollar will be there. So it will depend on what the offshore yesterday indicated. The Indian rupee should open at 70.70. It may not be that bad. It may be 70.4 or something. What will happen will depend on where RBI chooses to defend the rupee.
Okay, all right. Thanks so much for that, Lata. Well, so it's going to be a difficult morning maybe for the Indian rupee. But on that note, let's hear out what JP Morgan's Sajid Chenoy had to say on the trajectory for the rupee going ahead.
What we've seen in the last year is that underlying competitiveness has been badly impinged both on the export front and the import front, and that will need two things. One is that we'll need a gradually depreciating currency. When inflation is running at 5% and the world is at 2%, just to stay in the same place, the currency needs to depreciate 2 or 3% a year. So we should not obsess about these numbers. We need to focus on factor market reforms. We need land reform, labor reform, banking reform, because only then will that underlying current account stay sustainable for the longer run. It's precisely because of a very murky global backdrop. It's precisely because India over the last year has been witnessing, like some other emerging markets, both internal pressures through slightly higher inflation and external pressures through a much larger current account deficit. Sure that inflation remains in the band that the RBI has, which the RBI has underscored in the last 2 meetings, and that's brought some confidence to markets. Ensure that the center keeps its fiscal deficit this year. I think that's critical, given that there's less control over where state finances are. And I think, and ensure that you engineer this calibrated rupee depreciation, which over the next couple of quarters should begin to help compress the current account.